Welcome back to the monthly portfolio update. I hope you'll find the information in this video useful, but disclaimer, please note that this is not investing advice. It's just my portfolio as it stands on Tuesday, October 1st, and can change at any time without previous notification. Following an investment strategy without doing the work yourself is almost guaranteed to result in losses. So please be careful, since it's your responsibility to do your own research before investing. Later, in today's bonus section, we will also talk about the current market rally and how I see it. So stay tuned if you are interested. But first, let's quickly take a look at this month's portfolio activity. In September, historically a bad month for stocks, I continued dollar cost averaging in the beginning before the September 19 Fed decision, adding to my Simtel, now a full position, which dropped because they reported lower revenue and earnings, even though they specify clearly that they undertook on bigger projects this year, which will pay out more, but later. We'll see at the end of the year if they will hit their targets or not. I also bought BVB, the Romanian stock exchange, more on this later, and Norofer Group, an agricultural products company which is very active trying to expand in the US and Brazil. I received some free shares from Meta Estate Trust and also converted some of my Romanian lei to Swiss francs, which I will get into the why in the bonus section as well. In terms of cash flow, I had zero inflows this month. Next month, I am expecting one of my biggest Romanian government bond issuance to expire and get the coupon and the principal, so I'll be fine liquidity-wise. Another eventful quarter for stocks came to an end. That being said, the portfolio as of October 1st, 2024 is looking like this. Please pause the video if you want to analyze each investment in detail. Alongside the Fed decision, there was also the Central Bank of China, which had a series of policy easing measures starting on September 24th. Probably not possible without the previous Fed cut, which helped with my Alibaba and Prosus positions, making them the best performers this month. While the Fed decision was somewhat priced in, the Chinese fiscal packages were not, and both created a positive wave that lifted all boats. That being said, the current pyramid allocation portfolio looks something like this. Overall, the portfolio was up 1.23% for the month, which is great, and year to date the portfolio is up 7% plus expenses. And was a very good month actually. I just failed by a little bit to reach a milestone in terms of AUM, assets under management. Actually, it went beyond at some point in the month, but the last day's retracements put me just under the milestone again. But this is a marathon, so I'm sure we'll get there eventually. Before going to the next section, if you are interested in the subject matter, you can leave a like and subscribe to the channel. It really helps bringing this completely free information to more and more people. As mentioned at the beginning, in today's bonus section, we'll be talking a bit about the current market rally and how I see it. Initially, I had another topic in mind for this month's video, but the news was too big to ignore, and also the timing was perfect, since in October 2022 I made a video about the market crash after the Fed increased rates by 75 basis points in that year's September month, and everything was down. Check it out in the description if you are interested. To be honest, I couldn't pass on the symmetry of it all. I love it and I think it's a metaphor for investing. Bad can turn to good and vice versa. Anyways, without further ado, let's talk a bit about this month's events. A rally is a sudden and sustained increase or improvement, often referred to financial markets or economic indicators. The implications of the current rally are both positive and negative on my pyramid portfolio. Let's start with the positive. I am heavily invested in the markets and, for the first time ever, I see green on all platforms. I use different platforms to invest in Romanian, international, crypto, etc., about 6 in total, and now each and every one is in the green, meaning I see profits everywhere, which is great. The important lesson to learn, or actually relearn, is that you don't fight the Fed. That being said, the truth of the matter is they didn't cut 50 basis points because the economy is doing great. And there is more potential for bad news than good news, which is already priced in. Now, that doesn't mean get out of the markets right now, because with the recent flood of new money from US and China, it's hard to believe that assets won't go higher. But the question is, for how long? Me personally, I have a big cash position. These increases caught me with a 29% of cash at the beginning of the month, and even though I DCA'd some of my favorite assets, is still very consistent. This, of course, in a rally is not ideal since you want to be 100% invested, but it's comfortable for me and I am in great company since Warren Buffett and others also are sitting on a lot of cash right now. Let me discuss a bit some of my moves this month. I exchanged some more of my cash to Swiss francs because I think it will be an increase in M2 money supply globally. We can see how much money the US, EU and also the Romanians printed compared with the Swiss in the below graphic. Switzerland is the blue line, and we can see that after they initially printed a lot of money during 2020, like all the others did, it was the only major country that didn't print more and actually reduced their money supply, which tells me that in the future, a Swiss franc should be worth more comparatively to a dollar or an euro or a Romanian leu. Now, this is not investing advice, it's just a test trade. I am the furthest thing from a forex expert, but the thesis makes sense. However, it doesn't mean it's straightforward because the dollar and euro are global currencies and the franc is not. So we are not really comparing apples to apples, but in the long run, the economic rules should apply. I discussed more about this same trade and the money supply in my first video, the pyramid portfolio. If you are interested, the link is in the description. Also this month, I added a new entry to my punch card. Number 5. The punch card is Warren Buffett's concept of only having 20 investments in your lifetime. And the new addition is BVB, or Bursa de Valori Bucharest, which is the Romanian stock exchange. I already had it on my watch list for a very long time, but now the position is significant enough to be included in the punch card. The main reasons why I decided to add it was because I see it as a 100-to-1 long-term investment, since trading volume should go up in terms of listing, number of people investing, amounts invested, etc. Last but not least, I think Romania will benefit from being in the EU, meaning the median salary, the living standards of people, valuations of companies will all increase. And also focusing on it is part of my edge. Not a lot of people focus on Romanian investments. The playing field is somewhat less crowded than the US stock market, for example. Now, here are the 5 entries I have on my punch card. Simtel, Hidroelectrica, Bitcoin and Microsoft being the previous 4 long-term holdings, and the new addition, BVB. To the moon, baby, but with patience. So to conclude, what's next? Well, of course, we don't really know. Things will be apparent only retrospectively, but I leave you with this thought. In the short run, the market is a voting machine, but in the long run, the market is a weighing machine. Asset prices are governed by investor sentiment, now super bullish, which swings like a pendulum, meaning it goes too far the other way and can come back down fast if conditions deteriorate. The first big test will be the US election results. In order to somewhat protect myself, I will still take a hit, but hopefully not very massive. I still have exposure to anti-inflation assets like gold, Bitcoin, real estate, as well as cash flow positive assets, dividend stocks, bonds, etc. So I should be prepared either way. This complements a very strong cash position, which should allow me to benefit from an eventual temporary drop in prices. Let me know how this month's development impacted your portfolio. September was statistically the worst month for S&P 500 so far, and this year outperformed significantly. Were you prepared or not, and how do you move forward with optimism or pessimism? Anyways, that's all for today. I hope you liked the video, and if you did, please don't forget to like and subscribe. See you next month. Bye bye.